Good morning, afternoon, evening, depending on whenever you're watching this. Welcome to another episode of the Everyday Trader. We need to apologize for our absence over the past couple of weeks, but we've been having fun. I'm joined here with my colleague, partner, and friend, Greg Jensen. How you doing today?
I'm good. And yes, as much as, we owe you all an apology because we haven't been talking about the markets, I'm not very sorry. It was beautiful. We spent some time in Jackson Hole, went to dinner, learned some things. I had a very intriguing conference last week. So we missed you all last week, but yeah, I'm doing great. I'm doing great.
Yeah, there's an
Discussion today.
there's an organization that Greg and I are members of that has a pretty prestigious list of members, and I don't know, they let us join. So they let us hang out with these people. I mean, the ilk of the sort of people are all somebody you're going to see on Bloomberg or CNBC, and they're very well thought of and recognized as thought leaders in the space of economics. And the reason we go to these events are so that we can I always tell people that you want to drink from as close to the source as possible. By the time you hear a news story or CNBC or reading it in the paper, it's somebody else's interpretation, and it's like the telephone game that it works its way down. Not that we're talking to the Illuminati who controls the world, but we are talking to people they're very high up that chain, and as I said, closer to the source. Federal Reserve members, well-known economists, people that are affecting policy and advising our leaders as well as other investors, and certainly a lot of capital that's represented at these conferences. And so the event that we went to is called the Teton Economic Outlook, and it's held in Jackson Hole, a very small conference. And there's more speakers than there are people, and we get to have very intimate personal discussions here. And out of the respect for those people, we can't share too much about what specifically somebody said. But Greg and I wanted to share with our audience sort of the high level themes of what's being thought of and interpretation of the data that we have, and just share some of that. And I think probably the best place to start is that we had small businesses and large businesses represented. So we had chief economists from both the NFIBs, the National Federation of Independent Businesses, which I think they have like 300,000 individual companies that are members, and they do surveys. They have a high frequency pulse on what's happening with small businesses. And then there's also the conference board, which approaches the other end of the spectrum as far as businesses. So a lot of the major like the Fortune 500 companies are members of the conference board, and they do the same sort of thing. They do surveys and share data on what's happening. And both of the chief economists were there speaking. And in my first impression is I think they both kind of gave the same sort of painted the same sort of picture. And that is that, things are not that bad right now, but we think they're going to get worse, but then they're going to get okay. And they're not going to be that bad. What was your read on either Dana or Holly's presentations?
Yeah, I think you're right. I think they both kind of painted the same picture. Well, they did paint the same picture, but kind of from a different angle. And I think it's been the same picture in that we are seeing a diverse opinion from big business to small business as well. It was interesting to hear, small businessmen are much more inclined to believe we're already in a recession than we're not, versus, and you look at the data, you look at GDP numbers, you look at employment, we're not in a recession, but a lot of the small businessmen feel like we're in a recession. And whether that's due to labor pressures or inflationary pressures or whatever it is they're dealing with that are struggles for a small business, it's harder for smaller companies right now in the US economy than it is for the likes of Apple and Meta and Nvidia. And I think a lot of that has to do with labor. A lot of it does have to do with access of capital. Capital has become more expensive with interest rates going up over the last year. And so small businesses are a little more pessimistic than big business right now as their outlook. And maybe it's because they're more I'm sorry, I'm wanting to jump forward to this conversation about artificial intelligence. We'll save it, but maybe they're a little more exposed to maybe fearful of it because they're not right there involved with it. But I think generally the conference was my takeaway is that most people felt like we're relatively optimistic where we're at right now in the economy. But that there was a general consensus that there's a recession on the horizon. I know there was one specific gentleman there who differed from everyone and said he doesn't think we're going into recession now, but most everyone else was feeling like sometime in the next 6 months to 12 months, the US is going to find itself into recession. And the question is how bad that recession will be. And but all in all, I think even with the forecast of that recession, it felt relatively optimistic that I walked away from the conference with.
So just a question. What does Greg think? Does Greg think we're going to have a recession in the next 12 months?
I'm going to say it's going to depend on how aggressively the Fed has to raise rates. I actually think the economy is doing much better than people think it is right now. And I actually think I'm in agreement with Jim Bianco. And I can say this with Jim's conversation there because he's also said it multiple times in different recordings and on he's been very active about this on Twitter. He feels there's going to be a resurgence in inflation. I'm in the same opinion. I think inflation's been artificially manipulated lower, and that we're actually going to see a resurgence of it again, because I don't think, in spite of what the Fed has tried to do with lowering rates increasing rates over the last year, I don't think they've slowed the economy down. I mean, you look at earnings are still really good for the most part. Yeah, we had a few bank tremors, 6 months ago. I guess it wasn't even 6 months ago. It's like 3 months ago, but it feels like 6 months ago. But I think for the most part, the economy's still chugging along and people still have money and we're still investing and we still have FOMO. And to me, that leads to the Fed hasn't accomplished their goals. So what are we going to get? Is the Fed going to start ratcheting it up even more to slow the economy down? So for me, I actually don't think we're going into. I actually don't know. I'm going to say I don't know whether we hit recession or not. I'm leaning to the belief that I don't think we're going to, unless the Fed really stomps on the brakes.
The data matters, right? So it's always,
Yeah.
this is the thing that drives me nuts when people are spending all this time trying to prognosticate how many Fed rate hikes are there going to be. It's freaking data dependent. I mean, it's going to depend on the data. I mean, that's just, if we, and the thing about the economy, and we've said this before, is like turning a super tanker. And I don't know if you've ever been on a big boat or a medium-sized boat, but if you turn the tiller a little bit and the boat kind of hardly moves, you turn a little bit more and then it moves a little bit and then you turn a little bit more and it turns sideways and everything just slams on. And I don't envy the job that the Fed has. It was funny talking with Kevin Cleason, who's he's the VP of research for St. Louis, works for Jim Bullard, which was another interesting thing because Bullard's retiring and Kevin didn't know it because Kevin said that Bullard was going to work for another 2.5 years. So it was what happened with Bullard is another big question mark because that was a surprise. I mean, at least it was to Kevin. But it was interesting because we talked about how Congress is working against the Fed. I mean, they're stimulating while the Fed is trying to bring inflation in and all these stimulating programs that we're doing under fiscal policy through the government are going in the opposite direction. But that's a lot of interesting discussions that you and I talk ahead of time about what we're going to talk about in this thing. And we always go a different path. We don't always go, we stick kind of meander off the path. But I want to, you mentioned Bianco, Jim Bianco, Bianco Research. One of the smartest people out there, definitely a thought leader. He is the first person who has said we're going to raise. We've hit the bottom for inflation for the year. And I gave Jim a ride to the airport, and I said, "Okay, so you make this call, but why?" And he had a very cogent explanation. And it's ironic that I did a little bit of research. I'm going to pull up a chart here. This is actually Kevin Cleason's research. This isn't what Kevin presented, but it's ironic that Kevin had this in a paper that you can find on the website. And what this is looking at is the month over month changes in inflation. And this is looking at 2020 to 2000, I'm sorry, 2021 to 22. And if you look at July here, last July, we had a big dip, the biggest dip of the year on both the headline and the core inflation. So just there tends to be volatility in those numbers, but we have such a low number. We're going to compare these are month to month. So we're going to this year, the next July number, we're going to be looking at a number that was remarkably low. And due to the way things work and quirks that happen, the way things, we've got a really, really low number. We're not going to get under that number. So the next inflation number, you heard it here second. You heard it first from Jim Bianco, but you heard it here second. And I'm, sharing what I hear is that we're going to have a big number. So the Fed, and the Fed knows this. This is Kevin Cleason. He published this a month ago. So this isn't a surprise. This is his data. We're going to have last year we had a very low inflation, and we're not going to get under it. So that's what they call base effect. You'll hear the concept of base effect. So I think, I'm not in the camp of recession. I'm actually more bullish, and I have been all year on the economy. Labor's really tight. And that was a theme that we heard across the board for everybody. You mentioned the guy that we didn't talk about, and that's, we didn't say his name, but Michael Drury. He's on the agenda. I don't think Michael would mind. He threw out that, we've got a disparity in recession, that we might actually have a recession. And maybe there's a recession globally, but there probably isn't one in the US. And if there's one in the US, he used this other term, which I've never heard before. So I'll give him full credit for it. This term we're probably going to hear more and more is a rich recession. So except for the rich people aren't feeling the recession. It's everybody else that's feeling the recession in the United States. That's not good to have that sort of disparity, especially during an election year. But I heard him throw that out. But jobs came up across the board, especially both from the small business standpoint and large business standpoint. Hard to find labor. We've got a very, very tight market. Dana Peterson's forecast for recession over the next, or unemployment rate over the next 24 months is not expected to go over 5. I mean, it's going to be like 4.8. We're like 3.8 right now, or 3.9 or something like that. But she has us not even hitting 5 over the next year and a half, 2 years. So
yeah, and if the labor market's
tight,
if the labor market's that tight, it's hard to say you're going to go into recession. It's hard to say you can be in recession with under 5% unemployment.
Under 6. Chris Waller would be in here dropping the F-bomb and banging on the table. By the way, Kevin Cleason used to work for Waller, so there were some interesting comments there about, Chris? Yes, we know Chris. These colorful conversations. But we've never had a recession with unemployment under 6. So
hey, which mountain range is that?
I don't know.
That's a really pretty picture.
Actually,
did you take
that? You know what? That's not a mountain range. That's a volcano.
Oh, that's a volcano.
Yeah, that is the sunrise on Haleakala.
Ah, did you take that picture?
I took that picture.
That's a beautiful picture.
Yeah, I really recommend watching the sunrise in Maui. Greg, can we go to Maui? Let's do a summit in Maui.
Yeah,
Sure. Okay, whatever.
Jobs.
Let's talk about jobs, because something that came up, and this goes hand in hand with this other theme that's running. And you know what? Greg and I are not experts. This is one thing I found about a lot of people, especially economists. They can be expert. They have opinions on everything. There's no shortage of opinions, and they immediately become experts on whatever the topic is. But certainly the major theme that has just caught the zeitgeist of the entire market, the world, the industry, everything, is AI and how that's going to impact. And Dana had some data that I thought was incredibly thoughtful and thought-provoking. And you might have seen this in different forms, but this is based on surveys of large businesses, which jobs are going to be most impacted. Where do they see AI, generational AI, coming in and being able to help them with efficiency? And it's something that you and I talked about. What do we want? What are we here for? Why are we doing this? This podcast on YouTube for our audience. And the idea is to, help you folks become a little bit more knowledgeable and maybe come up with some ideas. And so looking at that data that was shared. Oh, I got to stop sharing my screen because I'm not going to share her slides because I don't have permission to do it. I don't know if they're publicly available. So we can talk to them a little bit. Which occupations are going to be most affected by generative AI? And we're talking about this technology that can almost act like a human. But there's only so many things that a human can do, that a computer can do that a human does. And those are the thought jobs. Those are the brain power jobs. So things like information technology and computer programming. I found a YouTube video, by the way, that said you can program a video game. I programmed asteroids. And there's a woman who walks through YouTube and she said, just type this in, create code in whatever the language was, video. You just tell it what you want to do. Then there's some code and you copy and paste it into a compiler. You run it, you get some bugs, you fix it, and you get a video game. And I did it again, and it came up with a completely different set of code and did basically the same thing. I mean, it's pretty amazing. And a lot of the computer programmers are using this now because they can get chunks of their code written by AI. And that's the number one area that something like 83% of those jobs are going to be impacted by generational AI. And then you think of the next sort of levels down, and there's business administrative jobs. I don't know if you saw that today, Microsoft has released a new product that is going to use AI to help you become more efficient. So like it can read your email and it can suggest calendars, and it can serve as a pretty crude assistant, a virtual assistant for you. This is part of the reason why Microsoft is up 5% today, is they've got this new tool that's going to be available. I think it's a $30 a month subscription. And I can see a lot of people using this, and companies paying for it because it's going to make their people more efficient. So that's the second sort of category. But then you've got all these people that are doing keyboard entry and just basic data entry and administrative, and of course, legal, some of the things that can happen in legal. So there are jobs that are going to be impacted here. And then there's the other end of the spectrum, right? So you've got jobs that absolutely cannot be eliminated. So somebody who's going to come into your office and wash the windows and empty the trash, there's no way that that's going to be replaced by generational AI, not until Elon Musk gets the Optimus robots out there working. But labor, construction, there's just some jobs, forestry, agriculture, all of these sort of hands-on physical jobs, your mechanic, those jobs are not going to go away. And I just want to get your thoughts on that. I think there's some opportunity here before we go there. Any reaction to those comments?
Yeah. So the first one I'll say is that, you hear people on the one end of the spectrum, the coders, the attorneys, the professors out there whose jobs are at risk right now. And they'll immediately go to, oh yeah, but there's errors. And they'll find some anecdote of an error of why it's never going to replace such and such job, which is true. But how many errors are made by interns or paralegals or coders that are just beginning coding, that you have a supervisor or a manager or an attorney or a boss that ultimately ends up being the technical editor and still says, okay, you did all the grunt work, all the legwork as this junior analyst, this paralegal, or whatever the job, whatever the industry we're talking about is. Those are the jobs that I think are going to be eliminated. And a lot of companies, like, you're not going to see all IT, coding jobs disappear. You're still going to have a person who can tell AI, the AI program, this is what I want you to do, and then be smart enough to be able to read the code, make sure it's doing what it was told to do, and that it's actually going to supply the function. But the jobs that are going to be lost are that team of programmers that maybe is in India right now. That's where a lot of coding has been outsourced to, or Bangladesh, or whatever country that has set up these coding shops. Those are the businesses I think that are at risk right now, because if AI can now replace all of that grunt work coding, and a company that employs 5,000 programmers only has to employ 500 programmers now, all of a sudden their profitability goes through the roof because of that loss in payroll. Same
So
thing.
I just want to pause there because that's second level thinking, because you're thinking, okay, oh, maybe I want to avoid these companies that have these jobs that are going to be impacted, but the impact could be the other way.
Right.
Because now they can, do it with less manpower and therefore have more profitability. So it could go the other way. And that's more likely what's going to happen. I did want to back up one other thing too, and that's that you and I have both for a long time created content, and it is very easy to consume content, and it's also easy to critique content. It's difficult to create it. So you can read it, and somebody gives you something and you say, no, that's not quite what you could work with somebody and read it. And I think, yes, back to your comment that some of this stuff is going to generate content, material, code, or whatever that's wrong. It is a heck of a lot easier to review something and edit something than it is to create it from scratch. I mean, it's orders of magnitude easier. And I think you've probably done it. I mean, I know you've done it. Like, you're trying to write some ad copy. I think we talked, I don't know if we talked about it on here. My jujitsu professor wrote this ad that he put on Facebook, and I was like, man, that was really good. And he says, you know what? I went to Chat GPT and I said, give me the reasons for people that should sign up to jujitsu. And it gave him this, he said, I copied and pasted it and reshared it. And people have been loving it. So, being able to, generate that content is, so I think there's, in terms of opportunity here, we don't have the answers on this call. And I think Greg and I, we talked together about this and think, how is this going to play out? Where's the opportunity? What should I invest in? I think there's something there. I think we just probably need to scratch our heads and think a little bit more about where that opportunity is. Is it Microsoft? Is it an Oracle, or I don't know, or Snowflake, or some of these other Cloudflare, these other companies that are out there? I think we need to sort of explore and think a little bit more about those. But I also wanted to talk on the other end of the spectrum, is that these jobs that aren't going to be impacted, I mean, there still is a potential for efficiency in those space, and those places will probably have a stranglehold. And I'm thinking, like, when you think about construction or agriculture, I sat next to a guy one time who worked for John Deere. And I said, what do you do? And he's saying he's in the innovation space. And I'm like, innovating tractors? And he was telling me that they know to a square yard the chemistry of the soil, and they apply the right amount of pesticide and the right amount of fertilizer. And he says, we're working on getting that resolution down to a foot. And within 5 years, we'll be less than that, down to a few square inches. Putting the seed exactly where it needs to go with exactly the right nutrients. There's a whole potential for innovation in that other end of the spectrum. So I'm excited about what's going to happen with generational AI. It's going to be transformative. This has been compared to being as big as the Industrial Revolution, and we're in the middle of it right now. But things are changing pretty quickly underneath our feet.
Well, and from an investor's standpoint, because that's really where, my expertise is from, how do I look at this on how to invest? I mean, I remember when the internet was a baby and I was investing at the time.
Fax machine.
Yeah, exactly. Krugman will be forever famous. I'm glad maybe he's not keeping his mouth shut. I've just stopped listening to him years ago. Maybe I should go see what Krugman has to say about AI.
He does have something that's controversial, but
of course. Anyway, I remember when it was in its infancy, and you had .com on the end of your name back in the internet bubble days, and you were a multi-billion-dollar, $100 billion company immediately in many cases. And that's kind of going on right now in some senses. You say the word AI. I don't know that we really know the companies that are adopting it as well as we think we do right now. And so one thing I would say is be cautious in having FOMO and buying huge amounts of future earnings that are being priced into a company, because that may be wrong when they run companies up flagpoles price wise. I'm specifically looking at NVIDIA right now. NVIDIA is a company that I'd be very nervous chasing right now, even though they may be at the center of it. I remember when Cisco was at the center of the internet too, and was run up a flagpole. And Cisco is still around and still a good company. And they were at the center of it, but they priced in
JDS Uniface.
JDS Uniface is another one. But I would say, I remember back then too, there were some industries that they said, oh, well, the internet doesn't apply to farming. Technology, this is a completely different world. But fast forward 20 years, and every company out there that has not adopted the internet has fallen behind, if not closed their doors. Everyone has a website. In fact, now if you don't have an app, you're falling behind. And that goes from entertainment to food services to construction to agriculture. And so I agree with this idea that generative AI, this is going to change the future of the economy and what it will do. And I think the companies that embrace it and learn how to use it to increase their profitability, to increase their output, or whatever, however that industry chooses to use this new technology that's available, it is game changing. I just don't think it's just by NVIDIA and any of the software names that are tied to AI necessarily, but rather, how is Marriott going to use AI to become a better hotel company? And are they going to beat Hilton? Those types of things. Are Coke and Pepsi going to use AI and become more efficient at what they're doing? That's, to me, where it really starts to get interesting. And I don't think we know that answer yet. That's definitely one of the things I'm watching as I listen to conference calls, as I listen to earnings reports. And if you hear CEOs saying, yeah, we've applied artificial intelligence in this side of our business, and we're really excited about what it's going to do for profitability going forward, that's probably a really good sign that company is well positioned and trying to use this new technology, and shareholders are going to be rewarded for it.
And Greg, I worked for a specialty chemical company, a Fortune 100 company in the late 90s and the early 2000s, and I was in the strategy group, and that's when the internet was coming out. And let me just tell you how new it was that one of my coworkers went out and got the domain name for the company that I worked for, is Nalco Chemical Company at the time, NALCO. He was the first one to get nalco.com, and our biggest competitor was Bets. He acquired bets.com. That's how on the cusp that he was actually able, just a regular guy like me, coworker of mine, went out and got those names. He ended up giving the Nalco one because he worked for Nalco, but he sold the one to Bets for like $5,000 or something. He sold it to them, but it's pretty ingenious that he was able to do that. But I remember the message coming down from the board was, what are we doing on the internet? And we were, we got to get .com and we got to get on the internet. What were we going to do? And I think right now that those same meetings, I heard a comment on Bloomberg this week that all of these meetings are happening right now in boardrooms saying, what are we doing with AI? And every single company that's out there is thinking about it. That doesn't mean everyone's going to be a winner. And I'm still out. I have a bearish trade on NVIDIA. That's not working out so good. So it's not the end of the world, limited risk, but I don't know that NVIDIA is the right answer. And there are certainly going to be pets.com. Pets.com, everybody was, today I think pets.com would be incredibly successful. But back then it was well known that, it was a huge lot of money was lost and it just crashed and burned as an example. So we're going to have Amazon.com, we're going to have pet.com. And of course, Amazon for 10 years was flat. So how is this going to play out? I don't think the answers are all quite clear right now. Everybody's going to NVIDIA, but anyways, I think this labor thing is a big deal and how that plays out. And companies are going to be taking AI and using it to improve their bottom line. So it's just, I think we need to spend some more time thinking about it and see who the leaders are that emerge, see who the smart people are, and share that information here with our community.
Well, anything else you learned in Jackson? We want to share with anybody? I
Uh,
learned that Dick Mayo has hung out with some really cool people.
Dude, Dick
He went to
Mayo.
lunch. So I wrote, he went to lunch with Charlie Munger. He's met with Jamie Dimon. He had a conversation with Brian Moynihan. Just off
George
the top.
Soros.
Yeah,
George Soros.
yeah, George Soros.
I mean, everybody. And he's nailed it. So we can share what he said. This is a quick aside. And that he put up a chart looking at, listen, profitability comes from 5 places: profit margin, cost of goods sold, interest rate, taxes, or depreciation or other amortization. That's the only place that you can improve your profitability. And he showed like a waterfall chart, how those are all getting worse. So
Yeah.
eventually profitability has to affect margin. And by the way, last year was a rough year and he just absolutely crushed it, which is why he got to meet with Charlie. He had lunch with Charlie for 3 hours recently. They said Charlie wore him out. Charlie Munger.
Well, and that's what I wrote down one quote that he said, we've had 2 decades in the S&P 500 of above average profitability. And he said, I believe that is about to change. And his number one factor with that, I believe, was interest rates. And the fact that interest rates, we've become so accustomed to low levels of interest rates for the last 15 years because we've essentially been at zero since 2008. And yeah, we've had little blurps up where the Fed has tried to raise rates and then the market throws a tantrum and, the Fed has pivoted and put QE back on. And this is different now. I believe this Fed is different and that we're going to see, they may not go a lot higher from here. They might go a little bit higher, but I do believe we're going to sustain higher for a while. I don't think the markets, I think the disconnect where the S&P is wrong right now is they think that the market's going to, or that the Fed is going to lower interest rates back down to the 2% range within the next year or so. And I think that's a mistake. I don't think the Fed's going to do that. And that's the profitability that's going to impact earnings pretty soon. And whether that's because capital is more expensive to go borrow from the bank. But I think the biggest one that people just forget is that part of valuing a stock on a fundamental basis has to do with the discounted cash flow model of future earnings. And it's for the last 15 years, people who have whole models of how to value S&P earnings basically have earnings discounted at 0% or 2%. Well, that's not the case anymore. You've got to discount those at 5 and 6% right now. And that means if earnings don't go down pretty soon, the S&P is overvalued. So,
and there's going to be winners and losers. And so transitioning to another speaker who was there. So the president of Strategist Research, who's a very prestigious firm that provides insight to the people who sound smart. A lot of them sound smart because they're talking to Nick Bonchak's team of people. So Nick's the president of Strategist and talked about 4 themes going forward. I think this is probably a good place to wrap this up. That there's these thematic momentum that's out there and places to look when you start looking at your portfolios. And of course, AI, we talked about that. That was the first one. There's things there. The answers may not be quite so simple. You need to think through who's going to win. But of course, in the face of recession, cash flow is going to be king. So there's some cash flow aristocrats. And on the top of that list is Apple. Apple, current market capitalization is just slightly over 3 trillion. You and I remember when they hit 1 trillion and everybody thought that was impossible. We've tripled since then. The other is deglobalization. This is something that's very real and happening. And we could probably spend a whole show talking about this concept of reshoring. We were looking at going to low-cost manufacturing centers, and because of COVID and international issues that are happening, like with, of course, in Ukraine, now everybody's going the other direction. And the other thing Dick Mayo mentioned was Jake Sullivan's industrial policy. We touched on this, that if you look at how much capital is being put into manufacturing just in the past year, it's insane. It's a hockey stick. And that's not an accident, because we are definitely reshoring. We're bringing manufacturing back. There's going to be opportunity there. I don't know if it's in industrial real estate. Is it manufacturing? Is it construction? There's something there. That's a third theme. And then the fourth is just looking at recession resistant companies. So maybe consumer consumer products and maybe utilities. I don't know. But four themes to be thinking about when we do see this super tanker make a pivot. And
Hey,
I got another
I
meeting.
like that.
I
Well,
got 2 minutes. By the way, is that your look? I'm wearing my Orvis shirt. Is that your new Orvis shirt?
this is a new Orvis shirt I bought. I don't know if it says Orvis
I
on
know
it.
you said you're gonna get the green one. I like it.
Yeah, I got the green one in Jackson when I was there. So pick me up a new shirt. I like this shirt. This is a good fishing shirt.
Gotta love Orvis. And you and I are going to be fishing in a couple of weeks, and we're going to do another exciting one after we come back from fishing in Maine, up on the border of Maine, with probably one of the most prestigious and elite organizations or events that happens globally. No exaggeration whatsoever. Camp Kotok. You and I are going to go to Camp Kotok, and we will have a lot of fun and learn a ton of stuff.
We'll let you know. We'll do another one before then, though. So
Yes,
thanks.
sir.
Thanks for listening to us. Don't forget, ask questions. If you have any, don't forget to like and subscribe. And
By the way, I won't be around next week because I am riding my bike across Iowa.
That's right. Don't get
Bragg.
rag.
Register's annual Great Bike Ride, 510 miles from the Missouri River all the way to the Mississippi.
Awesome. Have fun, man. Okay. Thanks, everybody. We'll see you all at the next one.